If your car payment feels like a second rent, you're not imagining it. Somewhere between the showroom smell, the low monthly payment, and the first insurance bill, a simple purchase turned into a machine that quietly drafts your future. Cars are incredible, freedom in metal, but the modern car economy is designed to extract as much as possible from ordinary people, month after month, mile after mile. This episode is the long version no one gives you at the dealership. Why cars are bankrupting Americans, why the math is drifting against you, and how to design your transportation so it serves your life instead of owning it. No shaming, no lectures, just the mechanics, the traps, and a plan you can run while tired. Let's start with the uncomfortable truth. For most households, the biggest cost of a car isn't the car payment, it's depreciation, the part of the car that disappears while you sleep. Buy new and you're purchasing future used metal at today's premium. The second you drive off the lot, the market reprices your asset and the invisible meter begins. Over the first 3 to 5 years, that meter often dwarfs what you spend on gas. Throw in financing interest, insurance, taxes, registration, maintenance, tires, parking, tolls, tickets, and the occasional repair, and the cheap car becomes a 6-line budget all by itself. None of this means cars are bad. It means the price of mobility is paid in many small drafts, not one dramatic swipe. If you're only watching the monthly payment, you're aiming at the wrong target. Why does it feel worse lately? A few forces converged. Vehicles grew heavier and more complex as safety and convenience tech multiplied. Heavier vehicles cost more to build, buy, and insure. Complex technology makes repairs pricier because a minor fender bender now threatens sensors, cameras, radar, and plastic grills that carry wiring harnesses. Financing stretched like putty. 7-year loans normalize a car you can't truly afford by lowering the monthly cost and multiplying the total you'll pay. Insurance premiums have been climbing. Claims are more expensive, medical and legal costs are higher, and extreme weather events have produced more total losses. Parts and labor aren't getting cheaper, and neither is parking in dense areas. In many places, the built environment nudges you to drive for everything, so your car becomes a tax on every errand. If your wages don't rise as fast as these inputs, the car eats more of your life each year. Under the hood of most car broke stories are the same traps, dressed as deals. The first trap is payment thinking. Dealers don't sell price, they sell monthly comfort. If you only negotiate the payment, someone else negotiates the price, the term, the rate, the add-ons, and the trade-in. Stretch a loan to 84 months and nearly any sticker can be made to feel affordable, while interest paid balloons and negative equity lurks for years. Which leads to trap number 2, rolling balances. If you owe more than the car is worth and trade early, the deficit often gets financed into the next loan. Now you're paying for your last car and your current car at the same time. Trap 3, F&I add-ons, finance and insurance office. Protection packages, paint sealant, VIN etching, gap you don't need, extended warranties priced like jewelry, they're sold under fluorescent lights when you're tired and just want the keys. A fourth trap is the dealer convenience fee culture. Dock fees, nitrogen for tires, wheel locks, window tint, all rolled into the deal with big margins. None of this is illegal, it's just not designed for your side of the ledger. Insurance has its own gravity. Premiums respond to vehicle value, repair cost, theft risk, where you park, how much you drive, your driving record, and how insurers in your region price risk. Tech that saves lives can raise premiums because it's expensive to replace. A windshield isn't a piece of glass anymore. It hosts cameras and sensors that need calibration after a stone chip. If you add a new driver in the household or move to a zip code with more claims, premiums jump. Many people respond by dropping coverage levels to keep payments flat, trading a short-term win for long-term risk. One bad day can reverse years of careful budgeting. Underinsurance is a false economy. Fuel used to be the obvious cost. Now it's the least surprising. What matters more is how your life is shaped around driving. Long commutes are expensive in money and in hours you could use for income, rest, or relationships. Parking fees, tolls, and tickets punish the unprepared. City rules change. Street cleaning schedules, residential permit zones, and congestion charges don't care about your calendar. If your errands are scattered, quick trips multiply into tanks and tickets. The quietest cost of a car is time. Time spent maintaining, refueling, waiting at a shop, sitting in traffic, and earning money to feed the vehicle that was supposed to save you time. If you're thinking, great, so what am I supposed to do? I need a car. You're not wrong. The point isn't to abandon cars, it's to stop letting the car economy quietly write your story. You can structure transportation the way you structure money, with rails that run on dates, not moods, and with choices that favor total cost over monthly ease. The goal is to extract the freedom without buying the cage. Start by reframing the purchase. The cheapest car is the one you keep. The second cheapest is the reliable used car someone else already depreciated. New has benefits: warranty, known history, latest safety, but those benefits are expensive if you rotate cars quickly. If you buy used, aim for the boring middle, 3 to 5 years old with a maintenance record, a trim that doesn't require premium fuel, and tech old enough to be repairable by more than a single brand dealership. In both cases, match the car to your real life, not your aspirational trip once a year. If you shuttle kids in a dense city, a tank is not a friend. A compact with excellent visibility will save you more than a third row you fill twice a year. Rent the third row those 2 times. Ownership should reflect the 95% use case, not the 5% story you tell yourself in the showroom. Finance with a policy, not a feeling. Get a pre-approval from a credit union or bank before you meet a salesperson. Know your real rate and your max total cost for the entire loan, not just the payment. Pick a term that forces honesty. 48 months or less if you can swing it. 60 only if the math is clean and you plan to keep the car past payoff. Longer than that and you're buying a car payment, not a car. If you're upside down now, the right move is usually to pause the dealership treadmill, nurse the current car with preventative maintenance, and attack the negative equity with extra principal until you're right side up. The worst move is to roll that negative equity forward. It turns transportation into a debt treadmill that accelerates underneath you. At the dealership, your leverage is clarity and the willingness to leave. Negotiate the out-the-door price first: sticker, taxes, registration, and any dealer fees that actually exist, before you talk about trade-ins, financing, or add-ons. If they insist on monthly payment talk, write your number on paper and refuse the term creep. You can simplify your life by separating the transactions. Sell your old car to a reputable third party, or directly, if your state makes that practical, and arrive as a one-variable buyer. Say no to add-ons you didn't plan for before you sat down. Gap insurance can be worth it if your down payment is tiny and your car would drop fast in value after a total loss. Buy it from your insurer, which often sells it cheaper than the dealer. Extended warranties are rarely priced for your benefit. If you're considering one, get the price in writing, leave, research the coverage and claim experience, and only buy if the model you chose has known expensive failures that the contract actually covers. 90% of the time, a maintenance fund you own beats a warranty you don't control. Insurance deserves a clean, calm pass once a year. Shop the market. You're not married to your carrier. Raise deductibles to a level you can actually pay from your emergency fund. A €1,000 hit you can cover is cheaper than bleeding premiums forever. Don't skimp on liability limits. Future you is more valuable than a few euros a month. Balance comprehensive and collision with the vehicle's real value. If your car's retail value is low enough that a claim would net little after a deductible, you might carry liability plus comprehensive only, or even liability alone if you could replace the vehicle without borrowing. Ask about discounts you actually qualify for: bundling, telematics if you're a calm driver, garaging, safety features. Then document your policy so future you knows exactly what to do on a bad day. Daily operating cost is more about design than discipline. Design your life so the car is optional more days than not.
Proximity is a secret raise. If you can move closer to work or necessities, your car spends more days asleep than awake. If you can't move, redraw your errand map. Batch errands into one loop per week. Pick a grocery store on your route home and avoid one-offs that turn into extra miles. Keep a friction kit in the trunk: water, snacks, a charger, shop towels, a small first aid kit, a spare 20, so detours don't rent your wallet. Driving style matters too. Smooth acceleration, predictable following distances, and tire pressure set to spec produce mileage you can feel at the pump and wear patterns that double tire life. Maintenance is a discount you earn by being early. Oil at the right interval for your engine and climate, cabin and air filters, brake fluid, transmission service where applicable, belt inspections. A €20 filter is sometimes a €1,000 repair avoided.
If you live where transit exists, mix modes on purpose. Even 1 or 2 car-free days a week changes your math. An e-bike for local trips is a car payment killer when weather and infrastructure cooperate. Car share for the few times you need a larger vehicle beats owning bulk you rarely use. If you're in a 2-car household for convenience rather than necessity, test a 1-car month. Keep logs. If the only pain points are grocery runs and 1 weekly kid activity, a calendar and a small cargo bike might solve both for less than the second car's insurance. Mobility isn't binary, it's a portfolio. Subscriptions and software are the newest tax trying to colonize your car. Heated seats as a service, navigation that requires a plan, connectivity fees even when you don't care. Read the window sticker and the owner forum for your model to learn what features are subject to subscriptions and which ones are unlocked by default. Don't pay for toys you don't use. Cancel trials before billing dates. If you need navigation, your phone already has it. Your car doesn't need to be a smartphone with wheels, especially if you're paying rent on options you already own in your pocket. Electric vehicles are worth a sober look. They change the cost mix. Higher upfront price for many models, lower fueling cost if you can charge at home on a sane electricity rate, less routine maintenance, but potentially higher insurance in some markets due to repair complexity and parts availability. If your daily miles are predictable and you have a garage or driveway with charging, an EV can turn fuel cost into a low, steady number and maintenance into tire rotations and brake fluid. If you road trip often in regions with sparse fast charging, or you rely on street parking and public chargers, the math can be less friendly. As always, buy for the 95% use case, rent for the 5% story. If your current car already feels like a financial trap, you still have levers. Make it boring and predictable. Put your transportation on rails. A small monthly transfer to a car-maintenance and tires sub-account, a quarterly top-up for registration and inspection, and a monthly set-aside for insurance so the renewal isn't a winter mugging. If the car payment and insurance are eating your month, get 3 quotes for insurance, adjust deductibles to match your sleep fund, and enroll in a usage-based program if you're low mileage. If you're upside down, call your lender and ask for a simple interest quote with a schedule for extra principal. Small, automatic extra payments shave months. If you truly missized the car, run the numbers on selling into a private market versus trading at a dealer. The gap can be thousands in your favor. If you must sell at a loss, do it once and reset with a vehicle that matches your calendar. Don't take 3 small wounds when 1 clean cut would heal. There's a psychological piece to all of this, and it's bigger than spreadsheets. Cars carry identity. Advertisers know this. Friends flex this. If you tie your adult self-worth to sheet metal, you'll overbuy and undersave. Detach your identity from your driveway. Attach it to your bank's sleep fund balance, your ability to say yes to a trip without asking a card, your lack of late fees, and the fact that your week runs without drama. You can still love cars, you just don't have to rent status at 7% APR.
Let's visit 3 real rooms so this stops sounding theoretical. A 25-year-old with a modest salary gets offered an 84-month loan on a small SUV with a manageable payment. She pauses. She gets a pre-approval from a credit union, test drives a 3-year-old hatchback with a maintenance record, and buys it out the door for thousands less. She sets up a car, maintenance, and tires sink and lets $50 a month drip into it. She raises her insurance deductible to match her sleep fund, keeps liability limits strong, and enrolls in a telematics plan that fits her calm driving. She moves her gym to a place she passes on the way home. Her miles drop. Her budget breathes. She doesn't feel poor. She feels unbothered. A 32-year-old couple with a toddler and a dog are looking at a 3-row SUV because we're a family now. They test a compact wagon with roof bars and a hitch for a small cargo tray. They rent a big SUV for 2 holiday trips instead of owning bulk year-round. They align their work schedule 1 day a week to run co-errands, cutting a tank a month. They add a trunk kit to kill convenience store runs. They do preventative maintenance on a calendar, not a dashboard light. Their car is boring. Their life is less expensive. A 40-year-old who drives for work is drowning in a payment on a fancy badge. He lists it, sells private party for a stronger price, buys a 2-year-old's fleet sedan known for reliability with cloth seats and steel wheels, and pockets the equity difference into his sleep fund and a maintenance bucket. He accepts that the badge bought him compliments and bills. The fleet car buys him calendar and cash. 6 months later, his insurance renewal is smaller, his fuel cost is down, and his car doesn't stress him out when a client's garage is tight. He realizes the car was a conversation he didn't need to start. If you live in a place where driving is non-negotiable, you can still make the car a smaller character in your financial story. The rule that rescues every plan applies here too. Never miss twice. If a month's car costs overshoot, repairs, tickets, a surprise premium jump, the next month compensates. If your maintenance bucket gets drained by tires, refill it before adding toys. If you missed a scheduled oil change, book it this week and adjust your Friday spending number down slightly for a fortnight. Recovery beats perfection because perfection isn't on offer. Rhythm is. Because this is about turning ideas into miles you can afford, here's a 20-minute start tonight ceremony. Open your bank app and create 2 labeled sub-accounts, car/maintenance and tires, and car/insurance and fees. Schedule a small monthly transfer on each on payday. Call or click 3 insurers and get quotes with the same coverage limits. Document the best option and a calendar reminder to repeat annually. Check tire pressure tonight. Set a monthly reminder. Put a trunk friction kit together. Water, snacks, charger, shop towels, first aid, a spare 20. Open a note titled Transportation Policy and write a few lines you'll obey when tempted. Maximum loan term, minimum down payment, the rule for negative equity, never roll, sell, and reset, and the sentence you'll say at the dealership, I'm negotiating out the door price only. If you have a second car that mostly sits, plan an experiment. 1 car month with a shared calendar. Finally, map your weekly errands into a single loop. These are small moves. Together, they erase hundreds a month, not by starving your life, but by starving the leaks. There's a reason this episode feels less like a rant and more like a blueprint. Rants don't pay premiums. Blueprints reduce them. The car industry isn't going to redesign itself to be cheaper for you. Insurance companies won't stop reacting to the cost of repairs and weather. Cities won't uninvent parking tickets. What you can do is step out of the traps. Stop buying monthly comfort at the price of total cost. Stop treating cars as cosplay for an identity you could express more cheaply. Stop letting negative equity turn you into a permanent borrower. And stop letting convenience become the most expensive word in your budget. Cars can still be freedom, but for that to be true, you have to protect the part of your life that pays for freedom, your calendar, your attention, and your cash flow. The headlines will keep saying it's getting worse, because in many places, the inputs are drifting the wrong way. Heavier vehicles, pricier repairs, longer loans, tighter parking, and insurance that absorbs real costs we can't wish away. You don't control those inputs. You do control the shape of your week, the size of your car, the way you finance, the way you insure, and the rhythms you keep when your mood is low. Make those choices on dates, not feelings. Build small buffers. Choose proximity where you can. Keep your hands off add-ons that don't add value. Treat maintenance as a discount you earn by being early. And look for that quiet, underrated signal that you've outgrown the traps. Nothing dramatic happens. The transfers run, the tires last, the premium renews without shock. The car starts and doesn't star in your bank statement. If you want a line to remember the next time someone tries to sell you a life through a windshield, take this one. The right car makes your life bigger. The wrong deal makes your life smaller. Buy the car that makes your life bigger and structure the deal so your future self doesn't have to shrink to fit it.